Welcome back to Live Impact News here on WCNC Plus. I'm Jane Monreal. And as you know, the Federal Reserve cut interest rates last week by about a quarter point, the first time since December, many months, bringing down rates to about 4.1%. But with concerns about job market, ongoing inflation, the economic uncertainty, we still have a lot of questions about what this means for our wallet. Where is the money? So here to break it all down and its impact is Mark Henry, CEO of Alloy Wealth Management. Mark, always a pleasure to have you here in the Live Impact studio, schooling us on what is happening here, because after months of speculation, let's talk about the general terms. What drove this decision now, especially with inflation still above the 2% target?
Well, a lot of people's opinion, it should have already happened. However, I think the final piece that made Jerome, move was the jobs thing, where it just showed the slowing. 77,000 jobs added, and it just wasn't enough. And bottom line is, lowering the rate should allow expansion to happen. That's when it's cheaper to borrow money, companies will then add on. And when you add on, what happens? You raise your payroll, you add people on, you get bigger jobs, et cetera, et cetera. And that all comes from borrowing of money.
How significant is it that they're projecting maybe another cut or two soon, before the end of the year?
Yeah, I would absolutely expect one personally. I thought this cut, I was of the minority that felt like he should go ahead and be stronger and do a half a point. But I would expect us to have another quarter before the end of the year. I would certainly hope so.
All right, let's talk housing, Mark. Mortgage rates, a big concern for folks who are trying to buy, maybe looking to refinance.
Right.
What do you say is the number one question that you're being asked when this happens?
Yeah, every day is now a good time? Are the rates going to go down because of this cut? And this is where it's a little confusion. So mortgage rates are not directly tied to the federal fund rate, so you don't always see it. In fact, the last time we saw an interest rate cut, a couple weeks after, mortgage rates actually went up. Oh no, yes, it happened. So they're not directly tied. However, when they go down, typically you will see home interest rates follow at some point. Now, where it does have a direct impact is on things like your second mortgage loan, adjustable rate mortgages, HELOCs, things like that. Those are all going to be different, and they will have a direct impact, and you should see those go down.
Okay, and then for just the everyday consumer, how does this affect our finances, right? We were talking about credit cards, car loans, savings accounts.
Well, credit cards, unfortunately are high, and we have right now more credit card debt in America. I believe we're at an all-time high. And that's just sad. And more importantly, and this is what really concerns me, is we're seeing delinquencies. And so, again, I don't want to be a pessimist, but however, when you look back in 2007, we saw car delinquencies on car loans happening. We saw credit cards. We saw a lot of people with some big balances on credit cards all before the 2008 crisis. Are we seeing that again? There are signs of it. Definitely car loans are failing. People are struggling to pay that. So when you start to see signs like this, there is concerns. Now, the federal rate cut will have some of those interest rates go down a little bit, but it doesn't matter. They're already so high. Keep in mind, a high interest credit card, you're paying 22, 23, 24%, maybe more. A quarter of a point rate drop, if they even did that much, is not going to change anything. You got to get those gone.
All right, let's talk about the stock market. We're looking at right now, there's the futures.
Yeah.
A lot of it in the red. So mixed reaction, right, to the news?
Well, yeah, but remember, Jane, that we did see all four indexes right after the announcement close the market on a new high, record high, for all four indexes. And in 100 years, that's only happened 26 times that all four indexes chose to have a high on the same day, a new record.
All right, so what does that mean?
Just a little pulling back right now. People are taking profit.
Oh.
They had a record high the other day, and so we'll just take a little profit right now.
Yeah, why not? Is this a good time then to make some changes to your portfolio if you're an investor, or just, kind of play the long game here?
Well, everybody would like to be able to do something called timing the market, and we all should do that. And what that means is time in the market, not timing. Nobody knows how to time the market. However, time in the market is how you make money. So it's a great time to be in the market, and that's what I mean by that. Let's not try to decide, oh, we should sell today, we should buy today. Forget all that. Just keep dollar cost averaging. Invest every week, every month through your paycheck, through your 401, your 403, through your savings account. Just continually be in the market, and you will do the best doing it that way.
We are.
So it's called timing. Time
in the market.
That's right.
Not to react. The debate between cutting rates then while inflation is still elevated, how could that backfire, and how could people prepare their own finances at home?
Sure. A lot of people are still worried, as they should be, about inflation because it's still very high. It's coming down, and it's coming down quickly. But we still don't know the overall impacts of things like tariffs and stuff. I get that. However, the reality is this: inflation is not going away. It may come down, but remember, we had absolutely out of control inflation. So what people are expecting is to see lower prices. Slowing inflation doesn't mean the prices are coming down. It just means they're not going up as fast as they were going up. And this is where it's really hard on families, because you've got to get your spending plan in place. What I mean by that is, don't expect prices to go down. Maybe some things went down, like fuel cost, eggs, whatever. Okay. But other than that, the prices are out of control, and they're simply not going up quite as quickly as they were 6 months ago, a year ago. So prices are still going to be high, and you've got to get your spending plan in order so you can tackle this by getting rid of the credit card debt, the student loans, all the stuff that we don't need, and that'll give us some breathing room in the family budget.
And so we talk about this all the time, right?
Yeah.
You know, what is that first step to trying to get your spending plan in order? What do you take care of first at home?
I think for most people, and this is the thing, it just seems so hard, but can you honestly tell me where the money went? Can you look at your spouse and say, here's how much we brought in, and here's where it went? Unfortunately, most people don't even know where it goes. It's just gone. They get to the end of the month, and it's the 25th, and they're already broke waiting for the 30th check to come in. And that's because you don't know where it went. So the first step to really getting on a confident financial future is to track where the money goes. Let's get control. It's yours. Why wouldn't you control where it goes?
Yeah. Yeah, that's always a good idea. That's why we look at history, you know, where could we go if we take a look back, right? Sometimes you don't want to look at it, though, because it's such bad news. About the political climate, how does that affect the economy and the call from the federal government now and the current administration on looking for steeper cuts?
Yeah. So there's been an ongoing fight between the current administration and the Fed, and you know, they're supposed to be independent and all that, and people have their own opinion. I have mine. Most of you watching right now have yours. But the reality is this: politics is what it is. It seems more divisive right now than it's ever been. But that doesn't mean you have to, as a consumer, as a family planner, you still can be in control of your money. I can't control what the Fed does. I personally think they should have cut it more. Okay, that's my opinion. Someone else has a different one. But what we can do is take the appropriate steps in our own household so that we can build and be able to weather whatever storm comes. They raise rates, they cut rates, they do things we like, they do things we don't like. Let's not let that affect our personal household the way it does right now. And that's where it comes on getting on a confident financial future, by controlling your expenses, by controlling your savings, by being in the markets, by taking advantage of what's been a pretty darn good run in the stock markets. And a lot of people haven't been able to take advantage of it because they simply haven't had extra cash to do it with. And that's where you have to get out of the news, get out of the clutter, and get in and dive into your own household and do what you can do to control these things.
It starts at home. It starts right here with your own wallet, what you can do and things you can control. I like it. We want people to stay with Live Impact News, though,
Absolutely.
Mark Henry. You're right.
That's right. When I say get out of the news, get out of the headlines, stay with us, though, so you can get tips like this to be able to accomplish what you want in your life. These
discussions are so important. That's why we have them here. There's a great forum for that. And so thanks for debunking a lot of what people might be speculating on.
Sure.
Mark Henry from Alloy Wealth Management, giving it to us Real Talk once again with the latest announcement for the Fed rate cut. We'll see if those short-term Fed rate cuts also materialize. All right, we'll see you soon, Mark. Thanks.
Thank you.